Good afternoon, everyone. My name is Josh A. Adams, and we're joined for this presentation by my colleague Neville Grant. We're here to discuss this afternoon securing bank financing. But first and foremost, I want to apologize for our technical difficulties. But nonetheless, our aim is to deliver the message still. Just by a show of some sort of indication, can everyone hear us fine? Okay, perfect. All right, so we are going to push forward. As I said, uh, myself and my colleague Neville are here to present securing bank financing. So the first thing that we wanted to talk about when it comes to securing bank financing, securing a loan from a bank, is to describe what we consider is the ideal customer. And so the first thing that we're going to talk about is a person that has a vision and passion for the business. And what it means is someone who not just sees the business for today, but also has a 1, 3, 5, even 10-year plan for the business. But also, even from the initial meeting, it's important to demonstrate the passion that you have for the business, because lending money ultimately is a risk. And we need to know that you are up for that risk and that you are passionate and you believe in the product. So before I can believe in it, I need to have a sense that you yourself believe in that product or that business. The second thing is that the client fully understands the risk and has a mitigation plan. So what I mean by that is typically what happens is clients always see the optimum and the best case scenario for their business. So as soon as they get the money, the products are going to sell off the shelf and everyone's going to be happy and make a whole lot of money. And the reality is, and I hope many of you can relate, is that that's just not the case. And so when you are applying for a loan, one of the key things that your loan officer or credit officer is going to be looking at is that you have a full and complete understanding of what the risks are and also what you plan to do to mitigate or reduce the level of risk. So what happens if a pandemic occurs, or what happens if the items doesn't sell as much as you like? What happens if there's an injury or whatever the case may be? It's demonstrating that you understand the risks of your business and also be able to show or demonstrate that you have a plan should those risks occur. And then we move on to being resilient. So being an entrepreneur ultimately means that things are not always going to go according to plan. And so it is important that you demonstrate your ability to, when life hands you lemons, to make some lemonade. When things become tough, you're able to push on through. Because the reality is, as I said, things are not just always going to go according to plan. And so it's important that we demonstrate how well and how devoted and dedicated you are to this business, and you are prepared to see it through. And then we move on to can take feedback. I mean, this is key. It's key, because many people often take feedback as criticism. And so it becomes deflated. If I was to, suggest or provide some sort of feedback and some suggestions, many people, it's easy for people to take offense to it as if, they don't know what they're talking about. Your business is different. And the reality is that particularly in the BEDC, but people even outside of the BEDC ultimately want to see entrepreneurs succeed. And so it is the strength of the entrepreneur to take that feedback, learn from others' mistakes, to be able to ultimately benefit your business, your idea, and the thing that you're trying to, or the entity you're trying to create. And then there's a strong credit history. with previous successful repayment examples. Now, this is fifth on the list, but I will tell you it is very, very, very important. It ultimately speaks to who you are as an individual, but also your priority and things of that nature. So being able to demonstrate that you can borrow money and pay it back successfully and have a track record of that is absolutely key and important when ultimately applying for a loan. Now, everyone has to start somewhere. So it is not the end all be all, but I assure you that having that strong credit history, always paying if you've had previous loans. So, because all banks are going to do it, no matter what, they will do their research on your past history and not just in the bank that they are in. So for example, if you are applying for a loan at Butterfield, I assure you, Butterfield will be reaching out to all the other banks to make sure that you are in strong credit history with the other banks as well.
With that, Josh, I think it's important also to note that sometimes don't think that you need to have taken out a small business loan before, because it's the repayment history of your credit cards. Mm-hmm. It's repayment history with some of your vendors, even on a personal basis. So your Balco, your Telco, your Cablevision, your Cellbill, because Josh would have seen this as well. Sometimes the application shows that the entrepreneur had previous issues with credit association or with government. And the key there is to make sure that you're on a payment plan to get that resolved. So it's not just about a small business bank loan, but there's some other examples where your credit history was the key.
Absolutely. The next one is that the individual has experience in his or her business idea or have hired people with experience in the field. So the key piece to this is to recognize that the bank will always look at, from their perspective, look at a loan as a risk, right? And so it is upon you to demonstrate to the bank that you recognize that the risk that the bank is taking, but here are some of the ways that you are going to mitigate the risk for the bank in order for them to lend you the money. And so one of the things that the bank is going to be interested in is whether you have history in that business or idea, or at the very least are prepared to hire someone with history and experience in that field. So if you want to get into the retail sector and you have never been in retail, then it will be key to either hire someone or consult with someone or demonstrate that you've consulted with someone in that industry, which gives the bank a level of confidence that you know what you're doing, or the person that you've hired is experienced and know what they're doing in that industry. The next one I've keyed in as professionalism. I can only tell you the amount of times that people come either unprepared or just not together with their presentation or their approach. And I can only emphasize that first impressions are always key, as we all know. And so it is upon you, when applying for that loan, to carry a bit of professionalism with either your business plan, just your appearance, your tidiness, things of that nature, and being able to demonstrate and convince the bank that you are prepared and can handle this credit. Is financially aware is key. I've put there being financially aware because this demonstrates, that you fully understand the costs associated with the business. You understand, again, as I highlighted earlier, the risks, but as well as you've demonstrated a level of projections as well. So, what is the market like? What is the appetite like in that business? And if you were to sustain that appetite, what sort of projections and financials are you expected in the future? So again, financial awareness is sort of demonstrating that you understand the costs associated with the current business, but also have projections and an understanding of where the business is headed as well. And then again, being experienced and well-researched. So it doesn't necessarily mean, and oftentimes you have people who don't want to be pigeonholed. If you've been a plumber all your life, that doesn't mean that the only businesses you can get associated with is involved with plumbing. But there is going to be a request or an interest in finding out how much research have you done in this new industry that you're venturing in to demonstrate that you are knowledgeable in your business venture? Is everyone with me so far? All right, perfect. So ultimately, when we get into applying for a loan, people often ask, well, what is the information, what is the documentation the bank's looking for? First and foremost is a business plan. A business plan is so key. It demonstrates, it's helpful for you, yourselves, as well as the bank. In a business plan, it's important to have the concept and the business model. I need to be able to, as a lender, be able to understand fully the concept of the business that you are trying to get a loan for. And I say business model simply means how exactly are you proposing to make money off of this concept? The concept needs to be well thought of, and really create some sort of imagery that leaves no room for doubt, that anyone who picks up that business plan fully and completely understands what exactly it is you're trying to do and exactly how it is you plan on making money from this business. And then we get into market analysis. So understanding the appetite, the local appetite for that business, right? If you want to bring in solar panels, right? What is the appetite? How many houses could possibly be here? How many competitors on island do you have? What is the historical nature of solar panel sales in Bermuda and things of that nature? So having within your business plan a level and a demonstration of market analysis is key. And then strategy. So what exactly are you going to do? How, explain to me not just the concept of the business, but how are you going to get the business from point A to point B to point C and point D? So what are the key elements and obstacles that you foresee, and exactly how you plan on overcoming those obstacles? The other one is organization and staff. Again, you are not expected to be an expert in everything about that business, but how well can you accumulate a team, put a team together that best all serves a common purpose, and that is ultimately the success of your business. And then, as I mentioned previously, it's the financial research and the projections. So understanding within that business plan, when I pick that up, I need to know that you have a full idea of how much merchandise costs, what is the cost of acquisition, as well as the projections or the financial projections as well. And one of the key things, and I don't know if I've put this here, but I'll include it in the financial projections, is what we call sensitivity analysis. Absolutely key, because many people, again, will sell in the business plan that as soon as they get the loan, sales are just going to take off and go through the roof and be completely successful. But what we would look for as a lender is your understanding of what you plan to do should things go wrong. So
I think we covered in the presentation.
So do we? Okay, perfect.
In more detail.
In more detail, perfect. The other item next to the business plan is the personal financial statement, or what we call the PFS. And the reason why that's key is because ultimately we need to understand that you have the financial capability of supporting and for servicing that loan, right? Should the business not be as successful as you intended. So this is much more of a security feature. It gives us a level of comfort that should your business not take off and you don't perform as well as you should, that you yourself have the financial capability of servicing that loan in the event that things go wrong. Then we move into evidence to support the business plan or your PFS. So it's one thing to say it on the business plan, it's one thing to say it in the PFS, but in most instances, a bank is going to ask for evidence to support what is being said. So if you say that in your PFS that you earn a certain level of income, then the bank is going to look for either pay slips or bank statements to evidence that you do exactly earn what you say. As well as if you were to say, well, the cost, I need this loan so that I can buy certain amount of t-shirts. then we need to have a quote or an invoice from the manufacturer or the wholesaler of these t-shirts to demonstrate exactly what you say. And again, this provides a level of confidence to the bank that not only what you're saying is accurate, but that you have a knowledge and understanding of what's expected of you as well. And then finally, most people think this is actually the key piece. It's the sufficient security and collateral. But I'm sure Neville will agree with me when I say that before we even discuss security and collateral, what comes first is you demonstrating your debt serviceability. So the ability to finance and pay that loan is far more important than the security. So, but in terms of the security piece, it is again, should everything go wrong and should things not go according to plan, the bank still now wants a level of security to ultimately make itself whole for taking the risk of loaning you the money. So again, security could be something as easy as a guarantee from someone, as well as the inventory that you buy. It could be, you know, we can go on for days in terms of the security, whether it be, you know, chattel mortgages and things of that nature, but ultimately demonstrating that you have sufficient security to ultimately make the bank whole should the bank go, or should the business not perform as expected. And then finally, commitments from customers is important as well. So this demonstrates that what you're proposing is not just pie in the sky, that there is an appetite for your product or your service, and that people have demonstrated that once your business is up and running, that they will be customers of you. And that is key, because ultimately that is what is going to service the debt, right? The customers. And so it gives the bank a level of comfort that there is an appetite, there is customers who want to partake.
Yeah, it's just one key point that I think you highlighted there, that for entrepreneurs that have not applied yet, but your business has started out, the pay slips becomes important, because one of the things that we hear oftentimes from entrepreneurs is, you know, how do I prove my revenue? How do I demonstrate that I did earn what I said I did? And so that's why it is important to, if you don't have good record keeping, to deposit all of your transactions, income from customers, your revenue earned into a bank account, or keep very good records in terms of what you earned, because without financial statements, that's what the bank will use to determine the revenue for the business. So I think that's something that most entrepreneurs sort of take for granted, because you say, oh, well, no, trust me, I did. I made this money. And it also becomes important, especially demonstrating what you pay yourself for when you apply for personal commitments.
Yeah.
Because I know entrepreneurs take money out of the account and say, okay, well, I use this to, you know, pay bills or you know, go out to dinner, etc. But then when you make application to put your daughter in university, they'll say, well, show me what you're earning from the business. And because that stream has been inconsistent, you're not able to demonstrate. So either some form of record keeping or religiously depositing money into the account will help to demonstrate the income that you've been generating.
So it is always going to be a difficult space to say these are the exact items you need, because every business is different, every individual, every deal, every circumstance is different. But I assure you that should you turn up to the bank with a robust business plan, a personal financial statement, some evidence to support both the business plan and the personal financial statement, and then an understanding of what the security and the collateral is going to be, and then finally with a commitment of customers, that's a very, very strong base to at least begin the discussion with the bank on how to move forward with the financing. And then I'm going to begin with some don't do this, but do this instead. And then I'll turn it over to Neville to complete the slide and ultimately complete our presentation. Before we go forward, I just want to bring to your attention, there is a column on the, or at least was on the right side of our screen, where you can enter any questions that you have. So should you have any questions for us in terms of bank financing, by all means, now's the time to do so. But in the interim, I'll continue and say some of the key things that I feel that first-time or beginning entrepreneurs make that we'd look to avoid. And the first is, don't underestimate the power of relationships and connections. This is a very, very small island. You never know who can help you. You never know who can assist. And we are all interconnected in some way. And so even at the very least, from a reputation perspective, what you want is someone to hear your name or hear the name of your product and have a good rapport and good feeling about your product. But also understanding that in order to be successful, particularly in the beginning, it's being able to take advantage of those relationships, because you won't know it all, you won't have it all, you won't be all. And so to be able to pull on that relationship that you have with the person who, you know, works at BGA or whatever the case may be, to be helpful for you, ultimately will help and maintain and produce a profitable business. The second one is, don't assume more money will solve all problems. One of the key, if not perhaps in my lending career, one of the first things that they taught me was that you never want to put good money into a bad situation. And so it is upon you as the business owner, as the entrepreneur who knows the business better than anyone else, right? Whether or not it is financially feasible to continue to go down the road of seeking more debt, because nothing can kill an entrepreneur, nothing can kill a dream more than after, you know, the business doesn't work out as planned and you have nothing to show for it but indebtedness. And so it is not always money is the answer to every single problem. And so it's recognizing that it may be the business operation, it may be a relook at the model, it may be a relook at your efficiencies and things of that nature, rather than just continuously seeking more money. And the final thing that I will say is, don't be afraid to ask for help. The reason Neville and I are here today, the reason why the BEDC exists, the reason why there are consultants, is because people are there genuinely wanting to see and know that your business is successful. And so I would encourage you to continuously lean on people who have done this before or have skill sets in other areas that you may not be as knowledgeable in, and take advantage of that, because there are people who genuinely want to see you do well. And so with that, I will turn to Neville to
you can stay,
complete.
You can stay there, and hopefully everybody can still hear. But Joshie has raised some very important points, and we'll continue that theme and probably try to move through it relatively quickly so we can leave time for your questions. But the one item that I would highlight of this list is, don't spend your cash up front. And the reason why I suggest that is because sometimes your cash can be part of the overall financing package, meaning your 20,000 could be one part of the contribution for total borrowing of 100,000. And what entrepreneurs sometimes do is they spend through all of their cash first, then come to the bank and say, I'm almost there, let me get financing for the rest, when we're talking about leverage. And we can talk a little bit more about what that means and how that will work, but just make sure that your cash is a part of your overall financing package. The next one is probably one of my favorite quotes over the years of both working in small business and working at the bank. We have our conceptual ideas in our head. We think this will be an amazing to do this, we will have this, I'm going to open up this business and it's going to have all these amazing features, and then we start to put numbers to that. And then we say, oh, wait a minute, because truth be told, there's a psychological amount that you're not prepared to borrow. And that's why people come to the bank and say, I need 50,000. And I say, why not 45? Mm-hmm. Why not 55? Because it's this magical number that you have in your head that you feel emotionally tied to. So sometimes you want to have a list of all the must-haves, what you absolutely need to get your business started or going. and add a few nice to haves, right? So that would be the piece about the dreaming in color. So could it be a marble countertop? Yes. Would that enhance the overall experience of your business? Yes. Now, do you need marble? No. But sometimes that little bit of an additional item, because I remember a story about a barber. He opened up his barbershop, and at that time it was pretty novel to put a PlayStation in the barbershop. Now, did he need it to cut hair? No. But was it a nice feature for people waiting to get their cut? Absolutely. So just think about what are the list of the must-haves and add a few nice-to-haves to make your business idea much more successful. The other one, and this is what Jesse had raised earlier, about don't be too overly optimistic, because I think sometimes the fallacy is that you're coming to the bank and you think your banker wants to hear how everything will work out perfect. Well, if today is any demonstration of that, you will see that we had to adapt and move and shift, and now we're speaking to you in a room in front of a computer rather than the palatial settings that we had set up. But have a look at the multiple different scenarios. The one I would always encourage you to focus on first is break even. Be able to demonstrate that you can at minimum cover your costs, because everything above that is great. So we don't want to see a revenue projection that you're going to make 100 times your investment, because that is less interesting to a banker. If you just demonstrate that you could cover your costs, cover your loan payment, and cover some of your other expenses, and that's what we call the break-even analysis. This is not as applicable in the Bermuda realm, but in the current environment that we're currently sitting in, we're probably looking at the lowest interest rate environment probably around the history of the planet. Mm-hmm. But at some point, over the course of the next few years, that rate is starting to go back. So don't build a plan for the lowest interest rate environment. What does it look like when it goes up? And then the last point, which is probably the most critical, and I'm sure Jesse is seeing the exact same thing. Mm-hmm. Very rarely do I see people come in and have a plan for failure. But what they don't plan for sometimes is success. So they come in and say, look, I just have this one person, and we're going to have this one truck, and we're going to do this one little bit of business. And then next thing you know, they have appetite, customer interest for business well more than what they planned. So having the ability to grow and manage that growth is critical. Here is the application process. And again, this is generic, so we've tried to move it away from any one particular bank or the other, but just sort of the concepts that you would be thinking about. Bermuda is a place where we have a very small number of domestic banks, and you're typically going to the bank that opened up your account when you were a small child or were your parents' bank. But you may want to start to think about what do I actually want to get from my bank? What are the features? What are the benefits? What are the products? What are the solutions? Because that has a key part of it. Remember, in this particular case, although it may not feel like it, you're the customer. So you have the right to look around, shop around, and pick what's best for you.
Yes.
The other piece that you want to be able to pull together is, what information do I need to provide, right? So BDC gives you a very good idea of some of the sorts of things that you would need to provide to the bank. We've started out, and as you saw at the beginning of the presentation, Jesse talked about some of the things that you want to put together, but be very clear about what is required. And that's not just from the bank, but that's of yourself. What do you need me to provide? What is important? When do I need to provide it? What form of financing might I be looking at? Because as you would see that, there's overdraft, there's a letter of credit, there's a revolving line of credit, there's a mortgage. I mean, it's a whole slew. So don't be afraid to ask questions. Talk to your banker and say, what will be the most appropriate? How would that work? Because sometimes you may not need a loan because you don't have the ability to make consistent payments. You may need a credit card. Mm-hmm. You may need an overdraft if you're in the retail business. So have those discussions, talk to them right up front. The other piece, and we touched on it a little earlier, having a detailed breakdown of what you're going to spend your money on is your budget. It's the indication to you that if you were granted a $50,000 loan or $100,000 loan, what would you spend that $100,000 on? Because it will be key to understand what that looks like. We already talked a little bit about security, and here I'm not saying that even security will be required, but start to think about it. Because what you don't want to do is get through the financing situation and say, have you thought about security? And you need to go and have a conversation with somebody. So if you need to start those conversations with your spouse, with your family member, with your business partner, start to talk about that now. It doesn't have to be baked, but have a thought in terms of what that might look like in case that becomes a part of that discussion. And this is not a shameless plug, but the BDC offers various different support in the form of guarantee. So, but have that conversation with BDC early in the process. Don't wait till you're 3/4 of the way through the loan process and the bank says, have you thought about security? Start to have that conversation with BDC and the team pretty early. Don't make assumptions, because sometimes as we're going through this process, because it's new, it's unfamiliar, you often think, well, they must be talking about that, or they must be thinking about, they must know that I'm not going to be able to pay this back over 5 years, so they're going to definitely give me 7, or they must know that I'm going to borrow 50, but what happens if I run out? They're going to definitely give me more. So start to think about what those details are. If you have the bulk of your expenses listed as miscellaneous, break it out. Yes, there should be a small amount of the unknown that you need to calculate for, but think about what those are. Get somebody to challenge you. Get someone to go through and say, what do you think? Because that's all a part of who will do what when, which is why that process is important. So that's a generic overview of the application process. And maybe before we dive in, and I know we're relying on your chat and commentary, just a quick check-in. Is it all a blur? Are we still on track? We'll try to leave the next few minutes with questions. All right. Seeing nothing in the chat, we'll tick ahead. So these are the type of the financing models, and I won't go through all of them in great detail, but I'll at least give you a sense of some of the ways and some of the models that we could potentially use. So what we're talking about there is typical bank financing, and I think we have a lot of experience in that. We know exactly what's involved there, and that's what we're talking about today. BDC has a very range of funding options, microloan, the COVID funding that we talked about in the guarantee program, which we can go through in some more detail. Equity financing is very rarely used in Bermuda because in true entrepreneurial spirit, you never necessarily want to give up control, but sometimes a traditional repayment method might not be the best fit for you. And then other parts of it is you may have to build size and scale as this kind of ramps up. And so, immediately starting to make repayment on a loan may not work. If you use a capitally intensive business, like you have to buy a lot of equipment and then you build a customer base, it may be more appropriate structure to use equity. And again, this is starting to come more into the picture given tougher economic times where you approach somebody to buy their business, and rather than going and getting financing from the bank, you may want to get owner financing. So the seller is prepared to provide you terms with a particular rate. That is always great when you're trying to tie the seller into the longer term future of the business. And then the last piece is self-financed. We talked a little about putting your own cash in, but how do you provide financing from friends, family members, and other individuals to help you to self-finance that business? And the last point on this particular types of financing methods is there's no reason why you can't combine bits and pieces of all of this and have a little bit of equity, BDC funding, traditional bank financing, owner financing, as well as contributions from yourself.
All right, so now we have our first question.
Sure.
First question says, how does an entrepreneur come back from a bad credit history or character issue to be able to secure the loan? What steps can they take, especially in a country as small as Bermuda, where everyone knows or has an opinion of someone?
It's a great question. And it's a question that I think a lot of people shy away from. So the first thing we talked a little bit about earlier was make sure that you do not run away from your former obligations. The key, even for government, is to make sure that you're on some sort of payment plan. I never encourage people to borrow money to pay a government obligation, because typically you can work out a negotiation plan with any of the government entities, get on that payment plan and stick to it, and it's going to be interest-free largely. So what I would also recommend is work out a repayment option with your lender. So I think sometimes, you know, we tend to say, okay, well, I'm going to hide away from this, I'm going to be embarrassed about it, address it. Think about how you might be able to take some of the older financing that may have been bad and include it in whatever the proposed financing is going forward. And so it's always key, because sometimes the bank may say, we may need you to take 6 months to show and demonstrate that you're able to stick with that repayment plan before we want you to come back. And nothing's wrong with that. I don't think, you know, being temporarily sidelined while you become a little bit more strategic into the future, it's nothing wrong with that. But the key is, if you make a plan, stick to it. If you commit to a repayment option, stick to it, because that again helps to demonstrate and show commitment. Because we all know that life's not perfect, and you can potentially come back from it. So, Shashi, I don't know if you want to add anything.
Yeah, and I mean, completely agree with what Neville said. I think the other thing was ensuring that the plan is as sound as possible, because ultimately a bad reputation just means it's just another layer of risk. But lending in of itself is risky, and so what the bank is going to be looking for is outside of that, what, you know, recognizing the history, what sort of confirmation, really securing, whether it be, and I think the key piece is within the evidence to support the business that ultimately you're trying to do. So an organized approach, a professional approach, and an understanding that you understand the risk, and here is how you're going to mitigate it.
Yeah, and don't hide it. The worst thing that you could do is allow the bank to find out about this and have to come back to you.
Right.
So I would say raise it right up front. Say, listen, you know, I had a previous loan facility. It did not go well. The business didn't transpire as I expected it to. It resulted in a debt that I have a credit association. I've been in contact with them. I'm on a payment plan, because the worst thing that could happen, we say, you know, how have you managed our facility? Oh, it's been perfect. It's been amazing. And then we run the credit report and we see that there's a history of you know, bad debt and failed repayment on facility. So I would say be upfront. If there's been past failure or past lack of success, then highlight it, talk about it, include it in your plan.
Yeah, absolutely. And we'll sort of leave on this note, is that I myself, and I'm sure Neville has as well, we've all come across clients and even lended to people who have at one point or another ran into bad situations. So if you've run into a difficult situation previously, it is not an automatic no. It does not mean that the bank is no longer prepared to work with you and assist you. It just simply means that more work needs to be done in tightening up what is ultimately the risk of lending you the money. That's all it means. Next question, can you speak to skin in the game? Should those who want to secure bank financing be prepared to have some skin in the game as part of the application process?
Yeah, so what I would say is, this is a form of commitment. So it doesn't necessarily mean that will be cash, right? Sometimes people think skin in the game means cash. There is sweat equity, there is experience, there is knowledge. So I would much prefer to lend to somebody who has a very strong history in the industry, a very strong reputation, because you could lend against that. You know, in some cases, and Jesse rightly pointed out, we do cash flow lending. We don't do secured collateral lending, because that means if we did and it was a terrible repayment on the facility, means that we're going and demanding on the collateral. That's not the intent of a bank. We don't make money, and I know this is not a state secret. We don't make money collecting collateral. We make money when it's been lent out for a long period of time and you pay us back with interest. That's how a bank makes money. It's a basic concept, not even a secret.
Yeah. The other thing is, in terms of skin in the game, the important piece to recognize is that when you look for a bank loan, the bank is ultimately sort of accepting that in some way it is a partner in this deal. It is with you along with this venture. And so what you don't want, or what the bank is trying to avoid, is to feel as though they are taking all the risk. They are the ones who put up all the money, and should things go wrong, you sort of dust your hands and you walk away because it's at no inconvenience to you. So recognizing that if I'm going to, and I say I in terms of the bank, if I'm going to lend you the money, I need to know that you're just as committed, just as involved in this business as we are. Now, you may not necessarily be a 50-50 arrangement, but ultimately, I just need to know that you are committed and invested in some way, shape, or form. So again, as now reiterated, it doesn't necessarily have to be in money. I mean, you can demonstrate that for several months, you've did so much research, or you've done so much work, or you've gotten the process from point A to point B, and now you just need, financing to get from B to C, sweat equity, things of that nature.
Or maybe we can talk a little bit about the types of collateral, if that helps people. So we'll talk about A-class collateral and B-class collateral. And I'm really using those to show the strategy, the strata of strength. So A-class collateral will be cash, a car, house. So anything.
Just want to stop you. By any means, if any time we're using language that is you're uncertain about, or you need further clarification, please let us know. I assure you, Neville and I are sitting in a room and we're just looking at a screen. So I don't know if I'm looking at confused faces or heads that are nodding in complete understanding of what we're saying. So if at any time we need to go back and further break down what we're talking about, and partly we're going to take the blame for this because a lot of the language that we use in our space is common language, and perhaps we take for granted that some people may not fully understand what we mean. So if we've ever confused you or need further clarification, please let us know.
Well, that's a great point. So collateral is what we're using as security. So I'll try to demystify that right up front. And then it's the types of collateral. A-class collateral, in sort of our definition, or top grade collateral, will be anything that could be liquidated or sold, right? So it's going to be a ready-known asset where you can find value, right? So car, house, boat, bike, cash, shares, stock. So these have known values, and I'll put it easily. If it could be listed on EMU, I would classify that as A-class collateral. That's something that can be sold to somebody, of which somebody knows or can find out the value relatively easily. And so you would look at that group of security. So sometimes it may be a stack of records, or it may be, and they will have different value, but it could be cash. So that's what I would call A-class collateral, or tradable collateral, or tradable security, or security as a known value. Then you would have what I would describe as class B or B-class collateral, which are intangibles that you couldn't necessarily immediately determine a value for it, but it has value. Personal guarantees, letters of commitment, letters of intent. A good example would be a customer base. So you will hear this language when you're buying and selling a business called goodwill. And that goodwill sometimes means, what is the future earning power of this customer base? So again, that could potentially be used as collateral. The other thing that you will hear sometimes the bank uses a fixed and floating charge. That just means we take a charge over all the assets of the business, whether they be real, whether they be tangible or intangible. And so that has a value as well. So we're just trying to provide a little bit more definition about the term sweat equity, because it could come in different forms and different forms of collateral.
Next question. How has COVID-19 impacted the ability for businesses to secure first-time financing or additional financing? What's the financial institution's appetite?
Okay, so it's a good question. The first thing I would say, not specifically related to COVID-19, but it speaks largely to a bank is always going to be more reluctant to look at new money. So I didn't have a stutter. I'm saying it deliberately. New money means this is a brand new business, this is a brand new entrepreneur, and this is a brand new request, right? So we're talking about no history, no track record, no deposit rate, no understanding of what the business can deliver, versus what I would describe as an existing business where you have a known customer, you have a history and a track record of that customer paying, you have financial statements for that business. So if you had to pick between the two, one has a history of activity, trading, value versus something that's new. The new is always going to have more risk. It's not that it's a new, just it's going to have more risk. So in COVID-19, you're going to be much more cautious about new, and you may ask additional questions that covers like a sort of COVID-19 overlay. So you would have the unknowns, and so in a COVID-19 world, you would say, well, given the fact that people can't physically come into your establishment, how are you dealing with that? What does your web sales look like? What does your online ordering look like? What does your delivery service look like? So that would have a COVID-19 overlay. But if you had to look at the difference between a brand new to business, new to market, new to bank, new to the industry versus an existing business, you could sort of look back and say, in 2017, we did this. During the last financial crisis, we did this. And so you have a little bit of a history to draw from. So the bank may now ask in a COVID-19 environment what I would think would be appropriate sort of COVID-19 questions. You know, how are you accommodating what is a new paradigm that we're dealing with?
And I would actually flip it in a way and say it is actually incumbent upon the borrower to demonstrate that you are aware of COVID-19, you are aware of the impacts that will have on your business, and here's what you plan to do to ensure the bank or the business is still profitable. And so with that, it demonstrates that you have a level of foresight and there's a level of understanding of the impact of COVID-19, and sort of it is a lot easier or has a stronger appetite for the bank to lend money to people who upfront demonstrate that they understand the risks involved and have a plan and a mitigation way to resolve or reduce those risks. Next one, is there a number one mistake that you see over and over again with entrepreneurs / business owners in Bermuda? If so, what do you recommend can be done to address this?
Yeah, and this will sound very weird to say, but the number one flaw and error that I see is people underborrow, right? So you create your list. We talked about this earlier. You create a list of all the must-haves. You add a few nice-to-haves, and that number comes out. For argument's sake, I'm making this up, 150,000. But because you're emotionally tied to that being a big number, you sort of say, well, maybe I can make it work for 90. Because I just don't want to borrow 150,000. And sometimes being undercapitalized means you're not able to deliver your solution effectively. You're not able to reach the customers that you had thought that you would reach. You're short on marketing. And we talked about this a little bit earlier around your personal financial statement. And so you end up with what's called a double squeeze. Because you're skimping and borrowing and moving and shifting on your personal side to put it into your business, just so it has the proper funding. You now took some of that money out of your personal savings, which means when your bills at home come due, you can't pay. The business is not generating what you thought, and so it's struggling a bit, and you end up getting pushed from the home front and pushed from the business front at the same time. So I would say what I've seen more than not is people not borrowing enough or not having the proper capitalization in the business to make it a true success.
And I would say it is not either preparing a business plan or the business plan isn't robust enough. That is absolutely key, because before you start any venture, there has to be a level of research involved and fully understanding of what it is you're trying to do. And it's a very difficult space to sort of reiterate, particularly to first-time entrepreneurs, because when you don't know, you don't know, right? And so there's a lot of things that entrepreneurs say, yep, I've got that, or yep, I could do that, no problem, that's it, and everything in their mind is already well taken care of, or they can handle it and it's no problem. But it is that business plan, is that fully understanding of the risks involved. It is fully doing the research of others who are perhaps in that same industry, or the competitors, and the impact that your business will have on that, in that market. But also the sensitivity analysis, as I spoke to earlier. So if you have, if you have it in your projections that you're going to sell 100 shirts, and here's why you're going to sell 100 shirts, and you demonstrate exactly the plan that you have that says you're going to sell 100 shirts, and I may well believe you that you're going to sell 100 shirts, but I also need to know what your plan is if you sell 60 shirts. What does that mean? Does that mean that you're going to reduce expenses? What type of expenses are you going to reduce? What sort of efficiency measures are you going to put in place should things not go according to plan? And coming as a banker, it often sounds as though you're being doom and gloom, and all you ever talk about is the negative side of things. But it ultimately is simply for the benefit of the borrower, to demonstrate, because the reality is not everything is going to go according to plan. And so the better prepared you are for those circumstances, ultimately the better it is for your business.
Well, that's a good point too, right? Because you don't want us to be right. I would much prefer for the entrepreneur to be right? If you're going to make $1 million, fantastic. Let's go out, let's celebrate, let's appreciate your success. But you just don't want us to be right.
Next question. Can you speak to generally the financial institution's viewpoint on various industries in Bermuda and the ability to gain financing for businesses in those industries? For example, retail, restaurant, personal services, transportation, etc.
No, it's a good point. So this is generally for all banks and more industry focused, right? So given the current impact of COVID-19, the tourism, hospitality industry is under a lot of pressure, right? Difficult to see us get to the numbers, the table turnover, the visitor numbers that you would expect to see in a business in the hospitality. Retail has what we would describe as a very low barrier to entry, which means anybody can fly to New York, buy a couple of boxes of clothes, jeans, shoes, shop, whatever it is that you want, bring it back and sell it. So very low barrier to entry. That means your competition changes almost every day, so very difficult to do. Talking a little bit about restaurants specifically, all of us have dreams of standing in our own restaurant, walking around, greeting people and doing well. Very expensive to start, high competition. So not very difficult to enter into, very expensive, but your average restaurant's probably going to be north of $1 million to set up, and you're going to have a lot of competition. So any industry, and this is just generally, same with personal services, gyms, hair salons, barbershops, very low barrier to entry, lots of competition, and your competition comes in very frequently, very fluid, shifts and adjusts. So the general rule that I would use is Bermuda, you don't create new market share. You just divide up the existing market share, right? So when you think about your idea or your business plan, think about how you can create new markets, or how you can move into what's called blue oceans, a lot of red oceans, which is a lot of competition, a lot of blood in the water, into what would be described as a blue ocean where you don't have competition. So what I would say is add niche ideas or unique features or concepts to your business idea so that it's not generic and you're creating a new customer base. Because anything in Bermuda that divides market share means that you're only moving customers from one place to the other. Mm-hmm. So you open a sandwich shop, you're not creating new people that eat sandwiches. You're just going to move somebody that likes your sandwich from somebody else that you don't like the sandwich. So those are very highly competitive markets. And so as a general rule, a bank is not going to be as excited when you're talking about creating a business idea or concept or borrowing where there's a lot of competition and low barriers to entry.
All right. Do the banks stroke financial institutions have an orientation process and or a learning training process for businesses to go through to educate and raise their knowledge? If not, is this something to consider?
No, it's a great question. Again, another shameless plug. I think our partnership from the banks with BEDC is critical. There's a lot of resource that's available here at BEDC, and thanks again for hosting this seminar presentation. So I think, yes, is it incumbent necessarily? The banks have to be very careful sometimes, and this is not a cut-off, but we have to be very careful sometimes of providing advice to a borrower that they take up, because later you come back and say, well, that wasn't my idea, that's what you told me to do, that's why I defaulted. So, yes, we're consultative, we're going to be in thought leadership, we're going to help you to, get the best business that you possibly can, but we're going to rely largely on organizations like BDC. There was a program sometime years back called Business Track, where we would provide like ongoing training and updates and knowledge sharing sessions. I know various different banks on island provide, seminars, thought leadership, expertise in particular area. But yeah, we're going to largely rely on BEDC and other sort of entities in the industry for thought leadership and planning.
I would say to that question, yes, but there's a balance, because ultimately, as we all know, banks are businesses, and so there comes a balance, because the bank recognizes that it is actually more profitable, or is in a more profitable situation, the better educated the customer base is. And so there is a level of training or advice that can be given to best prepare the customer for the business, but at the same time, at what cost, right? So I do know, for instance, banks have programs that are training young entrepreneurs or young people, as well as seniors, investors, things of that nature. But that comes at a cost, right, in order to fulfill those services. But at the same time, there's a balance, because, as I said, the better educated the customer base is, in fact, it is actually more profitable for the bank. So it is within the bank to provide some sort of training process or program, or put some learning mechanism in their lending. But ultimately, it also thrives with partnering with relationships such as the BEDC and others to help facilitate and educate the customers. All right.
Is that all the questions?
I think I got one more. Oh, no. No, I think that's it.
All right, so we know we started a little late due to technical difficulties, so we got 5 minutes left. Maybe any wrap-up thoughts? I think there's a lot of resources. I think we've plugged and pushed BEDC pretty hard. Very informative website, lots of information there. There are a number of tools on the various different bank websites as well, if you want to look to see what they have. But there was a key part in the early part of the presentation that talks about ask for help. If you don't know, speak to people. Make your first stop BEDC to talk with one of the officers about information that you can gather, details that you can garner, just to help you on your journey. And again, if you have any questions, reach out to your local bank as well, and have a conversation with your relationship manager at the bank.
Sure. I guess I will end by simply saying thank you all for attending this seminar. Both Neville and myself appreciate it. We enjoy doing these sorts of things. And so by all means, as he said, if ever you want to have some follow-up questions, some thoughts, ideas, even if you just want to bounce a few ideas, not just of ourselves, but of course the officers within the BEDC, collectively, we are all more than willing to help, because ultimately we are actually here for your success.
Absolutely.
So on that note, I'm going to figure out how to end this, but I appreciate you all, and you have a great afternoon.